I'm here to talk about the psychology of capital raising. Why do some investors commit immediately while others in the space hesitate? What makes one capital raiser consistently raise millions while others struggle in the space? Most capital raisers think that raising capital is about the numbers, the deal structure, how well you stress tested the financials, how well you conservatively underwrote the property. The truth, guys, most retail investors don't care. They're not technical. They're rather trusting that you've done your homework and they're leveraging your expertise. I, for one, have ADHD. It's a massive blessing and a massive curse. And I would much rather bang my head against the wall than look at an underwriting spreadsheet, and I am not alone. In my experience, capital raising is about human psychology, and even the most sophisticated investors, your high net worth investors, doctors, lawyers, entrepreneurs, they invest based upon logic. They don't invest based upon logic and fact. They invest based upon emotion and trust. Think about your own investment decisions. How many of you have ever made the decision, not just in investing, but in life, because it just felt right? We all have. Understanding this is the key to raising capital and having success, yet most capital raisers, they make the same mistake. They assume that the numbers and the slick pitch deck is going to convert investors. They spend hours perfecting their spreadsheets, only to be met with hesitation. Why? Because numbers might justify an investment, but emotion and trust is what drives the decision. And your ability to connect, to build trust, and to guide investors through that emotional journey is what separates those that struggle from those that consistently raise millions. Before joining Rise 48 this past year, I spent nearly 25 years in tech sales. I was consistently the top performer in North America. I knew how to close deals. I knew how to win business. I was selling complex software solutions, deals worth millions, deals with C-level executives that didn't have time for fluff. I learned how to get to the point and emotionally connect with my prospect. I learned how to build relationships with others that mattered. And most importantly, I learned how to understand what truly moves people to taking action. So despite crushing the commission checks, something was missing. I was making great money, but without building real wealth. That, of course, led me to real estate. First, I started fixing and flipping houses because my wife and I watched an HGTV show one night, and I said, honey, this sounds super sexy, let's get involved. So then I became a passive investor and have now invested in 37 deals as an LP. Then I launched my own fund and started raising capital by monetizing the network that I had built up. Fast forward to today, and I've now raised almost $50 million for my personal and professional network, most of which, by the way, was done as a complete side hustle, okay, in the last 2 years in the type of environment that we're in right now. And that's why Ben gave me the self-proclaimed Rookie of the Year status in the space. But guys, here's the key lesson. I didn't do this by chasing capital. I did it by understanding investors better than they understand themselves. Some call it emotional intelligence. And now I'm no longer a free agent in this space. I've partnered with the starting lineup at Rise 48, a firm that dominates in execution, investor alignment, and growth. But none of this happened overnight. It took years of trial and error. It took refining my approach, getting better, making mistakes, failing forward, learning from those mistakes. And today, I want to share that blueprint with you. And by the end of today's talk, I want you to walk away with a few things. The mindset shifts that separate struggling capital raisers from successful ones, a step-by-step approach to help investors confidently move forward, strategies to unlock the full potential of your network and the network of others, the power of follow-up and why it's the secret sauce, how to pick a lane, stay consistent, and resist the urge to chase after shiny objects. But most importantly, if you take nothing else away from this, please take this. Desperation repels capital. Let me repeat that. Desperation repels capital. Capital isn't raised, it's attracted. Have you ever asked an investor, what's stopping you from moving forward? Most of them, their response has nothing to do with numbers. Instead, they say things like, I just need to feel more comfortable. I just need to do more research. It just doesn't feel like the right time. That's emotion talking. Your job as a capital raiser isn't just to present the deal. Your job is to help investors navigate their emotional journey from skepticism to conviction. Think of an investor's journey like a bridge. One side, you have doubt, fear, uncertainty. On the other side, you have trust and confidence and action. Your role, build the bridge for them. And the strongest material for that bridge, trust. Trust doesn't come from a slick pitch deck. Trust comes from consistency. Trust comes from being authentic and building it one drop at a time. Trust comes from showing up. Trust comes from helping your investors feel like they're making the right decision, not because you said so, but because they believe it in themselves. One of the most transformative experiences of my life was adopting my twins from Wuhan, China. My wife and I spent months in uncertainty, the paperwork, the waiting, the unknowns. There were obstacles we couldn't control. There were delays that we couldn't predict. But through it all, one thing was clear. This was not about us. This was about them, about giving them a future, about committing no matter how hard the process was. And I can tell you, it was not love at first sight. There were moments when the doubts crept in. The waiting felt endless. The process felt overwhelming. But we didn't waver. Why? Because this was bigger than us. And raising capital, it's a very similar mindset. It's not about you. It's about your investors. It's about helping them reach their financial goals. It's about committing to the process, even when things don't go as planned, like we've experienced the last few years in the space. When you shift your thinking from how do I raise money to how do I serve my investors, everything changes. Once you're at this point, you can now appreciate that capital raising isn't a sprint, it's a marathon. And I know a thing or two about marathons. I've run 20 of them. Not because I necessarily love pain or because I love running, but because I'm an achievement junkie and I'm dedicated to the long game. Here's what most people don't realize about marathons. Race day is not the hard part. The real challenge, the months leading up to it. Waking up at 5 a.m. to run in the cold, logging miles when you don't feel like it, fueling your body properly, building endurance one step at a time. And capital raising, guess what? It's the same thing. Race day, the day you launch your investment opportunity, is just the final stretch. The real work happens long before race day arrives. If you haven't trained properly, if you haven't put in the reps, if you haven't nurtured relationships and built trust with your investors, you're going to hit a wall. Your raise will stall, and you'll be scrambling for commitments. Because just like a marathon, you can't fake your way through capital raising. Most can't wake up one morning and decide, I'm going to raise $10 million today. Just like most can't wake up and say, I'm going to run 26.2 miles today. It just doesn't work that way. The people who crush their capital raises are the ones who put in the work before launch day. They've spent months or even years nurturing their investors, providing value. So when it's time to raise, they aren't chasing money. Investors are coming to them. Their launch isn't a struggle, it's a well-executed plan. And Marathon Day is just the final execution of everything that you've built. So ask yourself the question, Are you training like a top capital raiser? Are you showing up for your investors even when you don't need money yet? Because if you aren't putting in the miles today, you won't be ready when race day comes. Think you don't have time? Think again. The past 2 years, while juggling 2 full-time jobs, coaching youth sports, raising $50 million, and prioritizing family, I launched a podcast and wrote an industry best-selling book, The Fundamental Investor. We all have margin. We all have time. We can find it if we dig deep. It all comes down to reverse engineering your goals and taking daily action. Small, consistent actions lead to massive results. As a youth hockey defensive coach, my players all know my motto. You have to keep your head on a swivel. Why? Because if you're only focused on what's right in front of you, you'll get blindsided. You'll miss open opportunities. You won't be able to see the whole ice. Great players don't just react. They anticipate. They read the game before the puck gets to them. They position themselves for success long before the play unfolds. And capital raising, it's the same mindset. If you're too focused on just the immediate deal in front of you, if you're only thinking about today's raise and not the long-term relationships you're building, you're going to miss out. You'll miss key investors who aren't ready today but could be huge in 6 months. You'll miss key introductions that could unlock millions. You'll miss opportunities to add value and position yourself as a trusted expert. You have to stay aware. You have to be adaptive. You have to be proactive, not just reactive. Because in hockey and in capital raising, if you're not paying attention, you're going to feel defeated. And we've all heard that the follow-up is the secret sauce. Most people send 1 email, maybe 2. They spray, they pray. They get no response, and they give up. The best capital raisers, they don't make excuses, and they keep going even though the market has been tough. They nurture relationships over time. They stay visible even when they're not raising. They provide value without expecting anything in return. So when the time is right, their investors are ready. Follow-up isn't about pestering people. It's about staying consistent. It's about making sure investors see you as a trusted partner, not someone who connects only when you need money. So instead, let's stop focusing on what we can take and start focusing on what instead we can give. Too many capital raisers focus on what they need. We need more investors, we need more commitments, we need more capital. But the secret to raising millions, stop taking and start giving. Give value before you ask for anything in return. Educate your investors and help them make smarter decisions. Position yourself as the guide and not just another salesperson. Leverage your existing investors' network and leverage the network of their network. That's when you start to throw gas on your capital raising efforts. Too many capital raisers sabotage themselves with weak follow-ups. Here's, for example, what not to do. Instead of saying, I'm just calling to follow up, instead, how about, I was thinking about our last conversation and had a couple of ideas that might be helpful. Would you be open to discussing them? Instead of saying, hey, I'm just checking in. Instead, how about, I wanted to reconnect to see what stood out from our last discussion and where you think you might need more clarity. Instead of saying, you need to act fast, this offer won't last. How about saying instead, I know making decisions like this takes thought. What's the biggest factor you're considering right now? The goal of follow-up is not to remind people that you exist. It's to move the conversation forward and position yourself as an expert who can help. The best investors don't always say yes right away. Some of my biggest investors didn't commit after my first conversation or my second or my 52nd. But I stayed in touch. I kept adding value. I made sure that they saw me as a resource, not just a capital raiser. And eventually, when they were ready to invest, They called me. Listen, the action takers will win in this space. In capital raising and in business, those who take decisive action will dominate the marketplace. If you're too afraid to build a brand because you're worried about what other people think or what they say, you won't survive. The ones who show up, put in the reps, and stay consistent will be the ones that will rise to the top. Appreciate everybody's time today. Thank you. Find me after the talk. Check out my book, The Fundamental Investor, for deeper insights, and thank you.
One more round of applause for Jeremy. Thank you, sir. That was an awesome presentation.
Appreciate it.
Thank you very much. All right.